Right now, in the heart of Hollywood, there is a massive war brewing. And you know what? The future of your favorite movies, your favorite shows, it's all hanging in the balance. We're talking about the home of Batman, Harry Potter, Game of Thrones, HBO itself, Warner Brothers Discovery. This absolute titan of content is essentially on the auction block. So this is an all-out corporate war for a media empire, and we're going to break it all down as a live investment case study.
So let's just cut right to the chase. Here's the $100 billion question for you. This is a super high-stakes game with two very, very different players making a move for the throne. Looking at this whole situation, knowing what's at stake, would you take the bet? Let's unpack what exactly you'd be putting your money on.
Okay, so first things first, let's get our heads around the prize itself. To really understand this war, you have to understand why this giant, Warner Brothers Discovery, is both incredibly valuable and, at the exact same time, incredibly vulnerable. What's so wild about this is how it's really two sides of the exact same coin. I mean, on one hand, WBD is an absolute treasure chest. You've got a legendary film studio, a library of iconic franchises that is just immense, and of course, the prestige powerhouse HBO. But with all that amazing stuff, why would they ever sell? Well, the baggage is heavy. Most analysts will tell you it is way over-leveraged. That means it's drowning in debt and it's seriously under-optimized. And that vulnerability, well, that's like blood in the water for sharks. And that brings us to the sharks. Let's meet the two main contenders who are circling, ready to take a bite. The fascinating part is that they each have a completely different vision for the future of entertainment, which just makes this whole clash absolutely riveting. So what we have here is a classic new guard versus old guard showdown. It's fantastic. On one side, you've got Netflix, the global streaming-first giant. Their strategy is just so simple and frankly brilliant. Buy the factory. Just stop renting content from other people and start owning the intellectual property outright. Deepen that content moat so no one can compete. Then, on the other side, you have Paramount Skydance, a classic studio powerhouse. Their play is to consolidate the industry and rebuild the old Hollywood model, just on a much, much bigger scale. Okay, so we know the players, we know their strategies. Now let's get down to the brass tacks, the battle itself, by looking at the numbers. This is where the sheer scale of this war becomes crystal clear, and honestly, where the decision for an investor gets really, really complicated. And this table just lays out the two competing paths perfectly. Netflix's deal is for the crown jewels, the studios and the streaming assets, valued at around $82.7 billion. For shareholders, that works out to about $27.75 a share, in a mix of cash and Netflix stock. But then you have Paramount Skydance coming in hot, flying right over the top with a hostile, all-cash bid for the entire company. They're offering a clean $30 per share. So here's the crucial difference. Paramount is offering more immediate, certain value, cold, hard cash. Netflix is offering a stake in what could be a massively dominant streaming future. Which one do you take? But listen, and this is a huge but, neither of these megadeals is a sure thing. Not even close. From an investor's point of view, both of these bids are facing what is basically a minefield of risks that could blow the entire thing up at any moment. Let's just walk through the big ones, right? First, you've got regulatory risk. The government might just say, no way, you can't create a media monopoly this big. Then there's financing risk. Can these guys actually borrow tens of billions of dollars in this economy? It's not a given. Third, execution risk. I mean, trying to merge two massive corporate cultures like this, it's often a complete disaster. And finally, you still need shareholder approval. The investors themselves have to vote yes. For anyone betting on this deal, any one of these landmines could completely blow up the entire trade. So, with all that complexity, all those risks on the table, what's an investor supposed to do? What's the play? Well, let's try to decode the end game by looking at what the market itself is telling us right now. I absolutely love this analogy because it is exactly right. The stock market is just a giant betting parlor, and it's constantly weighing the odds, the probabilities. And the current stock price of Warner Bros. Discovery, well, it's placing its bets on how this whole war is going to play out. This chart tells the whole story perfectly. I mean, just look at this. WBD's current stock price is hovering just a little bit below Netflix's offer of around $27.75, but it is nowhere near Paramount's $30 all-cash bid. So what does that tell you? It tells you the market, the so-called smart money, thinks the Netflix deal is plausible, but it is highly skeptical that the bigger, more aggressive Paramount bid is actually going to happen. The market is pricing in some serious risk on that one. This whole situation sets up a classic investment strategy. It's called merger arbitrage. And in simple terms, it's just the act of buying WBD stock right now at its current price and betting that one of these deals will actually close at a higher price. If it does, you get to pocket the difference. It's a trade based entirely on the outcome of this corporate battle. So really, this all leaves us with 4 potential endgames. Scenario 1, Netflix wins. A streaming behemoth unlike anything we've ever seen is born. 2, Paramount wins. You get a new but very, very heavily indebted traditional media giant. 3, the whole thing just falls apart, which would almost certainly crush WBD's stock price. Or 4, a compromise, where the assets are all split up between the bidders. Each one of those paths has absolutely massive implications for the entire industry.
And that brings us to the single most crucial takeaway for any investor looking at this. Warner Brothers Discovery isn't really just a media company anymore, valued on its earnings or its content. Right now, it is a deal risk asset. Its entire value, its entire future is now completely tied to the outcome of this bidding war.
And that leaves us with the final and maybe the most critical question of all. Winning the war for Warner Bros. Discovery, that's one thing. But successfully managing the colossal debt-ridden empire that comes out of it, now that is the real challenge. And it's one that's going to define the future of Hollywood for years and years to come. So I'll ask you again, what do you think is the smartest bet?